From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. This is the COB, all the stuff you need to know about the day in business and markets. I'm Daniela Kuya and I'm here with
Juliet Sully. Hello.
Fantastic,
Don't we
Jules.
look good with our purple and pink?
Exactly, we're matching the screen behind as well. Purely uncolour coordinated. We didn't discuss it, but hey, let's check in and have a look and see how the markets have closed, because everything was roaring along until the RBA tried to ruin our party today.
And I think it's interesting that we actually, do we have the chart? Okay, we apparently don't have the chart, but I think it's really interesting that we did start to see a little bit more momentum coming back in the afternoon. There was sort of obviously that dip after the RBA minutes, and then a little bit further up in 2:30, and then we're kind of closing towards those lows, aren't we? The CBO 200, 0.4%. Consumer stocks certainly got sold off after those RBA minutes.
Absolutely, and I'm just looking at the ASX 200. That's up about 29 points, or 0.4% at 7,055. But yes, and maybe we should move on to the three themes, because the RBA minutes really captured the mood of the market after 11:30. And I was chatting with Paul Bloxham at the time, and he definitely noted that the tone had changed about sticky services inflation. They don't want to budge on reaching their target, inflationary target by the end of 2025. And we did see a reaction in the currency as well as the equity markets. And as you say, some of those interest rate sensitive stocks, consumer discretionary, well, they were sold off as a result.
Indeed. So I think just a lot more hawkish than what people were expecting. We can get Martin Crabb's take on it in a moment. It is also AGM season. Let's just bring up those three themes. AGM avalanche. Today we had the likes of Telstra, we had Newcrest Mining, Hub24, Rio Tinto. Rio's quarterly update was was quite interesting. And then of course we're looking ahead to more quarterly numbers coming through from the US as well.
Absolutely, and the big move is potentially Tesla. I do know that no one is expecting a good result for this quarter. It is a weak quarter, but also they've had quite a few price cuts that have come through, and I think their actual volume numbers aren't as great. Netflix, though, I'm sure people will be looking to that one to see what's happening there in terms of whether or not their advertising is working, and even though they don't like to cite their new customer acquisition, subs.
But I think this is the quarter as well where they stopped the sharing of passwords. Dad had a passport and password and all the kids and cousins and everyone was using it. Now you got to go buy your own. So I
thought a family could have one.
A family can, but I'm talking about a dad with adult children and the like.
That's why my son was going. Yeah. He was over in Colombia going, I can't get into
your Netflix. Exactly.
I'm like,
so
the password
he wants it, has to pay for it himself. So I think that will be interesting as well. They might see a pickup, and if people are worried about a recession and everything, then they're staying home and Netflix and chill. We won't get into the chill part. All right, let's have a look at some of the movers in terms of the sectors as well. The banks today, the ANZ up by about 1%, as was NAB Westpac as well. CBA just off that slightly.
Yeah, and green on screen for them. Also energy, we did see some strength pretty much across the board, with the exception of Woodside, which is a little bit weaker, although not really setting the world on fire. I think they were a lot stronger yesterday. And let's
have a look at Newcrest. We touched on that. They did report an over 18% slide in their quarterly gold production. That was hurt by maintenance shutdowns in the period. Looking at what they produce, copper output 30,624 tonnes. And of course that Newmont takeover, Danny, expected to occur on Melbourne Cup Day.
Yeah, I had a really interesting chat with Tim Reardon from Blackwater Partners, just saying the way that they're going to structure it is that when it's listed in its combined format, it's going to come back as a mid-cap in Australia. And they're looking at that because it is going to capture a whole lot of major, fantastic international large-scale gold assets. But for some reason, it's the way that the split between the US and Australian listing. But also Rio reported a marginal 1.2% rise in their third quarter iron ore shipments, and copper output was up 5% and aluminium output up 9%, and Pilbara iron ore unit cost guidance was maintained maintained. That stock was firmer today, but it's also worth noting that we actually had quite a lot of strength in terms of the iron ore futures over in Singapore. I think they're up to 120. Yeah. Again, defied everybody's expectations. And the stock of the day today was Rio Tinto. So let's check in and see what our two guests had to say.
Depending on what your cost base is and whether you've got to pay tax, the dividend's not particularly high at the moment. I think there's better things to invest in.
We have a rule that basically we look at any investment through a lens of something that we call best expression. So the best expression principle is that before you make any investment, to look at it, to sit back, to distance yourself from your research and to say, is this the best possible use of my money? And you get a reasonably valued, fully franked dividend yield from Rio Tinto. Or you could just go and buy a diversified ETF that probably has similar predictability, probably more predictability on the dividend, and similar type of growth prospects. So we would take that bet over Rio or BHP, and that's what we do.
Yep.
So if I did, so just to give you an exact answer, if I wasn't sitting on a big taxable gain here, I would sell and I would move into an ETF. If I was sitting on a gain that would be crystallised, I'd be very mindful of that, and I'd probably just be happy to hold.
So that was an interesting take in terms of moving into an ETF product rather than stock picking. But hey, let's move on to the special guest this afternoon, which is Martin Crabb from Shaw and Partners. Martin, thank you so much for joining us this afternoon.
Good to be with you, Danny.
So, did the RBA, are they going to spoil our Christmas party? Are they going to spoil Melbourne Cup Day?
I don't think so. I think all they did was reiterate the fact that they've left the door open for another hike, which we've always known. It's not new news. The futures market, the bank bill futures market, did move sharply higher on the back of it. It hasn't quite traded through all the SFE contracts yet, but certainly the bank bill futures have now priced a hike in. So we've always thought that November was a risk, but the key is just going to be the CPI on the 24th or 5th,
I think,
25th of October. So the market's hovering around this 1.25, 1.3 level. If it comes in hotter than that, because the monthly is volatile, but the monthly's been a little bit higher than people thought. Just this, nagging sort of services inflation that everyone's talking about. If that's persistent, then they have zero tolerance, as they said in their minutes, for a re-emergence of inflation. So if it doesn't come down, and we see a 5.2 or a 5.3 annualised, then they'll go again. But it is a case of probably one and done. It's not like they're going to be on a path of more. And you can see from the bank bill futures that goes out to the end of 2026, and we're still at above 4. That's what the market's saying. So we're on hold for years, not just months.
I think that's the part people are forgetting, isn't it? The longer part, and how much pain there could be if people are already starting to dwindle down their savings. Let's move to the third quarter US reporting season. Look, it was always expected to be a little bit tepid. We can move that chart off here. And it was always expected to be a little bit tepid, but potentially there will be a small pickup. I guess it's looking forward to the fourth quarter. But have you been sort of positively surprised by what we've seen so far?
Yeah, not as positive surprised as I'm going to be, because if I look at what economists have been doing, they've been upping their forecast for GDP, real GDP. In fact, the Atlanta Fed put a thing called GDP Now together, which looks at real-time measures, and that's tracking over 5%. That's a real number. So let's add 3.5% inflation on that. They're looking at an economy growing at 8.5%. So according to analyst consensus, it's about 6.5% nominal growth. Just remember that people quote GDP, real GDP, so you've got to add inflation on top of it, whereas earnings are obviously a nominal. So we have seen a little bit of a tick up in that black line, Juliet, which is just the last few days. So put in JP Morgan, Citi, United Health, some of the other beats that we've seen, and we've seen the market move from Q3 is going to be negative year on year to Q3 is going to be slightly positive, but the economy is going to be massively more positive. So I think there's a lot of room for catch up. So of the companies that are reported already, and there's not a lot of them, they're beaten by 10%. So we're going to see a much, much stronger quarterly reporting season than the market's predicting. And that's not uncommon they tend to underbake and then over-deliver in the States. We've been watching this movie for a long time, Danny, haven't we? Every quarter they do
It's
it.
called millennial earnings season because everybody gets a prize for
That's right, that's right. Everyone participates.
turning up,
Participation trophy, yeah. So I'm actually really bullish on this earnings season, Juliet.
All right.
Oh, that's yeah, it's interesting. That's crazy though, that GDP figure, that forecast, isn't it? That's super
that's
high.
the economy's strong. It's telling you the
A
economy's
lot
strong.
of it must be fiscal spending though.
Yeah, but it's the resilient consumer as well.
Oh, that
I mean,
resilient
people have been,
consumer.
as Juliet said,
I'm
people
not-
are running down their savings, but they are spending their savings.
I'm
Yeah.
not convinced. Sorry.
Well, no, because I was reading, and I think it was a Reuters forecast, or maybe from FactSet, but the consumer staple sector is supposed to outperform in this earnings season. So if you're expecting a recession and people are still out there spending, then that means that two things aren't aligning, right?
Yeah.
Or, as we've been kind of seeing, the data is holding up better, the economy is holding up better than we
Yeah, but it's
stressed.
definitely two speeds. So one of
Yeah.
the things today was Batcore. So that stock was absolutely smashed
Yeah.
today. AGM came out with the trading update and got absolutely belted because they're in the discretionary side of spending. So we saw with Stockland's quarterly yesterday as well that they run a lot of shopping centres,
Yeah.
obviously, and food and that sort of stuff up 9% year on year. But apparel and home goods down 12, 13.
Yeah.
So depending on which part of the economy you're in, you can be, absolutely flying like food retailers, albeit a lot of it's inflation.
Yeah.
Or if you're in the discretionary end, you're getting smashed, which comes back to this narrative that 15% of households can't make mortgage payments at the moment. So they have to cut back on spending. They don't have a choice.
And if
But
you think that's pushing out to 26, as you say.
yeah, it's
some
going to be a
big
long
pain
winter for
ahead.
some of those
Big pain
households.
ahead,
yeah.
Exactly. Now, what's happening with commercial mortgage-backed securities, the spreads? So we've also got. You don't have that chart. Oh, okay.
Well, I
let's go
mean-
and walkabout.
At our weekly investment meeting, we look at a whole bunch of measures and we
Yeah.
look at credit spreads like a
Yeah.
lot of people do, and just looking for warning signs. So the
Yep.
credit markets are usually the canary in the coal mine for the equity market. If you go back to the GFC and all that sort of stuff, the credit markets were screaming, screaming alarm long before the equity markets. So we watch the credit markets very closely, but they're not really showing a lot. If you look at just like BBB credit spreads in the US, which are the lowest form of investment grade, the spreads don't look out of whack. And then if you look at the bank's balance sheets, their loan arrears aren't really going nuts. But there's one sector of the market that looks scary, and that's commercial real estate, and in particular commercial mortgage-backed securities. Yeah, so they're trading at a 14% yield premium to treasuries. 14%, 1,400 basis points. So most of the BBB stuff's like 500 or 600. This is 1,400. So it's not quite GFC levels. I think it got to 6,000 points during, so a 60% yield premium. But we're at a 14% yield premium at the moment. So that's just one number, Danny, that just really sticks out. Everything else looks benign or as typical as you would get at this point of the cycle, even heading into a recession, and yet that one measure. So I just think that's just something for people to watch out for. Is there going to be a deterioration in commercial real estate? And it's mostly office people just not coming back to work the way they're supposed to. And that's going to maybe put pressure on some of the banks.
Although we mentioned today there was a lot of people in the office, wasn't there? There must be a spike in Tuesday that if you only have to work one day a week, Tuesday's the day.
Tuesday's the day.
Tuesday, but this morning was crazy. It was almost 10 minutes to get out of the station.
Oh, it was
this
so
morning.
long to get a coffee too. Those of us that come in every day should get priority straight to the top of the queue.
Exactly.
Martin, thank you so much. Martin
Always a
Crabb
pleasure,
from
thank
Shore
you.
Partners. All right, let's have a look at the leaders and laggards now in terms of which stocks moved higher. Cromwell Properties up 10.4%, TPG Telecom up by about 6%. Megaport, I think
that was down yesterday.
yeah, but I'm pretty sure I saw
the
a
announcement?
story about that too, and now it's just escaping my little brain. But it was one that did rise. We'll have to find that for you a bit later. And News Corp up by 3.9%.
Yeah, there's an activist investor sitting on that one. And Babcock, which we were, in terms of the laggards, we were just discussing that one. Consumer discretionary in the car space, automotive space, obviously leading to the downgrade there. BrainChip off by 6%. GUT might have caught a little bit, GUD, down 3.6%. Imogen and Paladin Energy. Paladin's actually been a little bit weaker of late. Bit of
and I
profit
think
taking.
GUD, so it bought
Oh,
the
that
European
automotive,
automotive light distribution for $12 million RVX. And I remembered Megaport. It wasn't so much a story, it was just that those tech players, you know, were the standouts today. All right, let's have a look at the small end of town. Dacian Gold up by 20%, Volpara Tech up 18%.
Quarterly results there. They had some decent results.
And then Race Oncology up by 8%.
And Meteoric Resources going meteoric. Newfield Resources down 22%, and Horizon Gold and Highfield off by about 12%. And I don't know any of the others, so we might just skip through those ones. And yeah, let's have a look at what is happening overnight. So quite important, some really big earnings coming out of America, and we've got Bank of America, Goldman's, as well as J&J and United Airlines. But we've also got some macro, Jules.
Yeah, retail sales and industrial production. So really interesting to give us a clearer pulse check, of course, on the overall economy. And then a really big day tomorrow, particularly when it comes to that China data dump. So the third quarter GDP, retail sales data, industrial production, all of that hitting the wire. So that'll be very key for our market.
Absolutely. And then going into the UK, they'll have their CPI and PPI, which we might get tomorrow afternoon. And the US will have the Fed Beige Book, housing starts, and Eurozone CPI. So certainly enough to keep everybody busy, as well as this AGM period, which is giving the markets some updates. But before we go, let's just check in and see how the SIBO is closed, which probably is the same, up 4.71 points or 0.3%, and also the ASX 200 up 29 points or 0.4%.
And a big day tomorrow because, of course, at our last virtual investor event, we asked if you were interested in adding alternatives to your portfolio. Nearly 70% of you said yes. So we're bringing together expert asset allocators to share how they build a portfolio in a space that has traditionally been out of reach for retail investors. We've also got managers from funds right across the spectrum of alternatives.
And join Koshi for Essentials Alternatives. It's happening on the 18th of October tomorrow from 11 a.m. Eastern Daylight Time. It's free to register. You can see the full agenda at ausbiz.co/essential. And just a note that a lot of the strategies and products being discussed are only suitable for wholesale or sophisticated investors. Well, that is it for us today. It's been a busy day, hasn't it, Jules?
There'll be another busy one tomorrow with the reaction to those big cap stocks coming through with their earnings and, of course, the China data.
Absolutely. And, of course, join us because not only are there a lot of great interviews to catch up on today on the website, but we will be joining you bright and early, of course, to run through all those great news stories coming out tomorrow. Have a great evening.
See you then.